You were listening to chartingwealth.com for Thursday, the 12th of October, 2017. Once again, we see everything up for the day. The S&P 500, the NASDAQ 100, TLT, the 20-year bonds, and GLD, gold. Let's jump right in and see what's going on with the markets. The S&P 500 up 0.16% for the day. We see the market just continuing to soar upward. That weekly chart, it's going into our second week, well above the Bollinger Bands. Remember, Bollinger Bands are volatility bands, and they expand when volatility increases, which is what they're doing right now. And we continue to see this market soar. The derivative oscillator is actually gained significant, about twice what it was in the prior week, and this is just going into Thursday. So still 2 full days left in the market for the week, and the price percent oscillator continuing to move up. As we take a look at the 2-day chart, what do we see going on? Of course, still price movement well above a long trend line. We're now connecting, what is that, 5 candles. So again, that's representing, now this is just the first day of the latest 2-day candle. So we actually see that these 5 2-day candles represent, that would be 9 days of movement. So this current 2-day candle won't close out until the close of business on Thursday. And what's going on that 4-hour chart? Well, as we look, we see that price movement has finally moved above where it ended on Thursday, the 5th of October. Been sliding sideways for quite a while, and we see that at the end of the day, it did pop up some. Now, what's very interesting here, is we don't have a move over yet in the 4-hour chart. The derivative oscillator's still negative, so keep an eye and see just when you can call a crossover, maybe in the morning. Maybe the market's going to level out and move down some more. Because again, the derivative oscillator and the price percent oscillator are telling us with this sideways slide that a lot of that upward momentum was lost. If it is gained and the price percent oscillator rotates over, of course, what does that mean for you? That you have a potential jumping in point on the S&P 500. Why? Because the 2-day vertical crossover occurred back in September. The weekly vertical crossover occurred there on the 29th of September. At the end of the month, you've had the pullback starting to occur, and when you have that crossover going up, it's your jumping in point for just our standard method of trading. Of course, we do have the power of the weekly vertical crossover where we look for a 10:30 entry point the following Monday. Of course, it was a weak one, but nonetheless, it still worked. It worked quite well. But again, we did notice a lot of caution. We noticed to everyone a lot of caution there. But again, the magic of the weekly vertical crossover proved yet again. Let's keep moving through these charts. What do we see going on the Qs? That is the NASDAQ 100. Still hasn't crossed over, going up on the price percent oscillator. Sure looks like it's trying. We do see the derivative oscillators finally moved over in the positive, but the week's not out yet. We shall see what we see. We might have a weekly vertical crossover. Again, if you want to receive our text notification, you have to live in the United States. This doesn't work overseas, and I know we have a lot of overseas folks that follow the program that are subscribers, but let me tell you, here's how for you that can't get our text notification. Please just listen to the comprehensive review and forecast that we do every Friday and put out over the weekend. That will give you plenty of time and tell you when we have a weekly vertical crossover. Those of you in the states that want to receive it, of course, you need to subscribe to our daily market review. It's absolutely free at chartingwealth.com. There are instructions there that tell you how to sign up for it. Quite easy to do. All you got to do is end up texting to the number 33222 the words Charting Wealth. Actually, make it one big word, Charting Wealth. Let's look at this 2-day chart. What do we see going on? We had a 2-day vertical crossover going up on Friday the 6th, and we see that the market continued to move up. Derivative oscillators gaining energy, and the price percent oscillators continuing to move up. And as we look at the 4-hour chart, what do we see going on? Well, it had sort of peaked out somewhere in the neighborhood. Let's see, the last on that was 147.82, the high 148.01. And where did the market end up at the end of the day on the 4-hour chart on Wednesday the 11th? 148.07 was the high, just barely topped a little higher, and it last was 147.87. So we're about where we were all the way back on Monday the 9th. So again, market sliding sideways. It's probably one reason you've not seen that weekly vertical crossover. So continue to keep an eye on things. Maybe that movement's going to be enough to drag over and tip over the weekly vertical crossover, and we may have a trade. We'll just continue to keep an eye on things and watch and see what we see, my friends. That is what it's all about. Okay, we will keep you posted when and if that occurs. Now let's move to TLT, up 0.19%. Oh, by the way, the Qs was up 0.30%. TLT, the 20-year bond fund, up 0.19%. Now, we had a weekly vertical crossover going down, of course, this last Friday, well, on Friday the 29th, rather, the same day that we had a weekly vertical crossover going up on the S&P. We had one going down on the 20-year bond fund. Interesting that we have bonds, which typically are an inverse of what's going on in the stock market for the last couple of days, moving up at the same time that stocks are moving up. Very interesting. So we had the weekly vertical crossover. We had a week of strong down movement over the course of the past week ending the 6th of October. And so far this week, up movement still hasn't penetrated the weekly trend line. The movement is below that, but we do see the derivative oscillator heating up and the price percent oscillator continuing to move down. So we do have a downtrending market, even with some up moves over the last couple of days. Actually, 1.5 candles, so that represent 3 days, had a spinning top on the 2-day candle ending on the 10th of October. Penetrated, of course, at that time, the 2-day trend line. So we have had that happen, derivative oscillators losing energy, and we see a flattening in the price percent oscillator. So again, like we said, keep an eye on things after all that down movement. You do not want to lose your opportunity to actually have made a successful trade once getting in after the weekly vertical crossover going down. We did give you that warning back when the 4-hour chart rotated over going up back on the afternoon of Monday the 9th. So again, keep an eye. Derivative oscillators continuing to gain energy, and that price percent oscillator is spiking up. We do seem to have had the real spike around the morning of Tuesday the 10th of October, and again sliding side. So keep an eye on that. Again, if it crosses back over going down on that 4-hour chart, that's another ping for you to jump into down movement and a good down trade, perhaps buying puts on TLT, or if you can find a decent spread as far as the bid and the ask on a down play. And remember, what do we have in TLT? We have an inverse bond fund that we typically look at there. So let's keep moving through things. Lastly, we go to gold. Gold was up the most for the day, 0.32%. Now, this is interesting. We had a weekly vertical crossover going down on the week ending the 6th. We have the derivative oscillator continuing to heat up, the price percent oscillator down. We have the week flat so far. We basically have a spinning top as far as gold goes on our Heikin Ashi candlestick. We look at the 2-day chart. We can see 1.5, that's a full candle ending on the 10th of October, and we see a 1-day, half of the latest 2-day candle. It'll end out on Thursday afternoon. We see up movement pushing that weekly trend line already blown through the 2-day trend line, and of course it's gone flat. Derivative oscillators losing downward momentum. So cautions there for down plays. But of course, what do we talk about? A total trading chart with gold as far as this 4-hour chart. It's just incredibly accurate. What do we see going on there? Well, the gold chart crossed over going up in the morning on Friday the 6th. And really since then, Monday, Tuesday, strong up movement. And it's really been sliding sideways since Tuesday afternoon and throughout the day on Wednesday. As far as our Heikin Ashi candlesticks, you can see where things peaked on the morning of Tuesday the 10th. It peaked right around 122.97, almost 123. And of course, where things closed on the day at 122.52 on Wednesday afternoon. So again, sort of a sideways slide right now. So keep your eye on it. If there is soon to be, and there may or may not be, but if you see that 4-hour chart rotating over, just keep in mind that 2-day and the weekly are still in strong down moves. That'd be a great jumping in point for a potentially successful downplay in gold by buying puts in gold. Remember, the bid and the ask on the inverse for gold is just really, I think it's DGZ, really, really illiquid. So puts on gold might be something good to practice. We have been hearing from you that you would love some training on options, and we are working toward that. We will keep you posted. Thank you so much, my friends, for being with us. We love to hear from you. If you have questions, problems, concerns, please feel free to reach out to us, cw@chartingwealth.com. If you're not a subscriber already, go to chartingwealth.com. Sign up for the Daily Market Review. The benefits are tremendous. You get the daily market worksheet to fill out every day to supercharge your trading, the weekly market worksheet, the trade worksheet to keep up with your trades, to learn the most that you can and keep a great record of what you've learned. You also get the layout we use at freestockcharts.com for free. That's the operative word there. And you get our How to Read a Stock Chart video. God bless, my friends. All the best from the entire team here at chartingwealth.com.